Okay, welcome. Alright guys, welcome back. I'm gonna talk about the stock market right before the holidays. Sometimes things happen on the holidays, people take profits, or sometimes nothing happens. I was looking at charts. Uh, First of all, hold on. Type in MMGinvest. I have 2 YouTube channels. Subscribe to both. I'd appreciate it. We'll talk about the news. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest anything you're not willing to lose or lose sleep over. Consult your licensed financial advisor. Don't use too much leverage or leverage ETFs and whatnot. I haven't been using them for a while. I mean, I still have positions on, but I'm letting them bleed. Trading half the time, if your trades are losses. I mean, you can make 10 trades, 7 are losses, 3 are winners, and still make money at the end of the month, at the end of the quarter, or at the end of the year. It all depends on position sizing and your strategy and risk tolerance, right? So the Omicron, whatever the crap they want to call it, is here. And my last markets video, I said they're gonna have some sort of event or something. Something will trigger to give them the excuse to print more. And it's also an excuse if the market corrects, because now they wouldn't care about the market correcting if it wasn't such a huge, massive bubble. But they do care about it correcting. And they also need an excuse for why more stimulus in the face of essentially, I don't want to say runaway inflation. We're not there quite yet, but obvious inflation that's popping up everywhere. First, it popped up where? In homes, as people moved out of the cities. Then used cars as stimmy checks hit. And then, and also, if we look back on the past 2 years, we've been getting, first we got stimmy checks and gracious unemployment for a while, paying more than your job, so why work? That's why there's a job shortage. There's also skilled labor and job shortage as well. Parent tax credits or whatever. Like everyone who has kids has been getting. I forgot, but it's a lot. Like $3,000 per kid. That's been adding to the inflation in in the real economy. Main Street stock market's not real. It's completely decorrelated from reality at this point. It's basically just stimulus induced bubble. Every month they're still buying over 100 billion worth of stocks, essentially, or giving them out to probably BlackRock and some other big firms, and then they're bidding up the indices. And that's why you see a decorrelation from, let's say, smaller companies' stocks and mid-tier companies' stocks from the actual index funds. The index funds just keep going higher. Meanwhile, the smaller companies that are in the index fund, their stocks are going, the individual stocks are going down. That makes no sense. Unless there's entities out there buying the indexes, which is like fake. It's no different from the people who say Tether is doing that with Bitcoin, right? That's kind of how I see it. And I wouldn't put it past them. At this point, you shouldn't put anything past them. They'll do anything, just to stay in power and keep the music playing, because they have to. If the music stops, pitchforks come out and torches real quick, especially next spring and once the weather warms up. It's another reason why they pull this shit during the winter, because it's cold and people are less likely to go outside and voice their concerns over the world we live in, which is I shouldn't have to explain. I'm probably gonna have an interview later today. We'll get into it. It's very risky for me because we'll probably talk about a lot of things. Alright, so some of the guys in the private group have shared some data. A lot of people do. There's a guy who from like London, from the city, shares data with me, and I don't agree with it all the time, but it's pretty it's accurate on a lot of things. Margin debt is through the roof again on the stock market. Every time it does, we get a nice correction. So where is the correction for 2020? Because it's right here, the correction. But margin debt wasn't as high as it is right now, which is scary. Flows into global equity funds, highest ever. Unreal. Just to put things into perspective, global inflows into equities have surpassed 1 trillion in the past year, exceeding the combined total from the past 19 years. Exceeding the combined total for the last 19 years, Goldman has calculated. Well, where did all that come from? It didn't come just from the US. It came from every central bank all around the world. They all turned on the printing presses, right? So this is inflation. People keep arguing about inflation. Like, it takes time, but it's all in the stock market. Not all of it, but a lot of it. Some of it recently has seeped out, right? As people moved further out from major metropolitan cities, the home prices exploded in the U.S., especially in Florida. The regions that are more free, where you still have normal. Like, if you look at Florida, it's normal there, guys. It's like it was in 2019. So home prices exploded there. Puerto Rico, all the crypto bros, I think the homes are 4x. So you kind of missed the boat on that. And other states as well. So inflation does seep out. It's just there's always a delay. I honestly believe the inflation we just recently seen is tail end of Obama's term and pretty much all of Trump's, and maybe some of the 6 or 7, I forgot, trillion Trump printed under his term towards the end during the COVID dip, right? So we're just starting to see that. None of that has really hit us. To put into perspective, and right now they're printing more, and they've been printing, and then they're gonna print even more. So I give it. There's probably like a whole year to maybe even 2 years delay from the money that goes into the stock market and pumps everything up and then comes back out. But here's the issue I believe the central bankers, Powell, has. In a normal, like, they would like to let the stock market correct something like this, right? By the way, to put it into perspective, this is how insane this shit is. Right here, hold on, let me change to the color. Right here, this was the COVID crash. The no, I'm wrong. Hold on, this is right here. Still, you can still see it. It's not that crazy. This was the COVID crash. This was a correction. Not exactly sure why. It wasn't that big of a deal. Just a little, pullback. We have dips here and there. But this was the big COVID crash. And if you zoom out in the grand scheme of things, not that big of a deal. Almost looks like a fake out. which it kind of was, because all the big money knew it was coming beforehand. If you guys remember, I had 2 months. 2 months I was talking about it before the market even crashed and everyone took it seriously. COVID. So I believe mainstream media they were downplaying it while they were all positioning themselves ahead of the market dump. And then a lot of them shorted, a lot of them just went into cash, and then they bought the dip. And then they printed trillions and trillions and trillions, right? And insider trading doesn't exist for your fearless leaders. Like Nancy is definitely the best trader ever in history. Like, that's serious. She's like top, like probably 3, if not 1. How is that even possible? If it's not just all everything before it happens because you're passing the laws, right? She'll be retiring soon. Wonder why. Well, age and yeah. Anyways, I do have a 9 sell on the weekly. And we had a 9 sell 2 months ago, but I didn't really take it too seriously. Sometimes the market does correct 2 candles after a 9 sell using the TDI. Look at the oscillators. I mean, look at this. It's been since 2003. It's been a huge party. This most recent party started. Well, it was from April 2020, right? Longest running bull market like ever, or cycle ever, or stretch without a serious correction. Here's the MACD. So in a normal world, the market would crash. In a free market, without any tampering, this shit would be crashing like right now. Question is, with intervention, will it? Because you have to put yourselves into their shoes. I would be scared to death to even let this thing fall. Let's see. What would be a 20% drop? Well, this is the NASDAQ that I'm looking at, by the way. It would take the NASDAQ all the way down to 13,306. Can it fall down there without popping the bubble? And how much will it cost them to reinflate it? See, people think like there won't be like massive inflation because if the market dumps, the money kind of like disappears and evaporates. Not necessarily, because if the bubble is big enough, right? It's this big. And even if I put it on the log scale, it's still big. If it drops more than 15 to 20%, I think all the boomers will take out their retirement because they need the money. They're at that age. And why keep risking your retirement? That's what I would do if I was just sitting on a huge IRA 401k, because they're at that age now. A lot of them are at the age right now where they could take it out. They don't have to let it ride and risk it. And I don't think most of them are savvy enough to think, well, at least the stock market outpaces inflation or keeps up with it somewhat. I don't think they're that smart. I think they would rather just have it out of the market and not risk it in the market, because if they can't afford another crash in the market, like a 2008 crash, and wait another 10 years for their stock portfolios, their retirements, to come back to even. They can't afford that. That's what I would be thinking if I was a boomer. So why not just take it out and cash it in? Just hold it in the bank, right? Because, I mean, the world we live in right now seems extremely uncertain. I mean, anything could happen, right? Politically, shit is pretty on the edge. They're pushing another variant right now. Geopolitically, things look very sketchy. Eastern Europe and above Australia, around Taiwan, right? Taiwan. So why would they risk it and keep holding on? They're at that age. A lot of them are probably looking at a decent amount. Not all of them. Probably half of them don't have enough to retire. But at the same time, if you're at that age where you could pull it, and the world seems very uncertain, made up, fake, or natural, organic. I mean, I don't think any of this is organic. But if they all pull it, that'll be extremely inflationary. What would they spend it on? I don't know, more RVs. That's a good question. To be honest, I guess they would just live off of it, right? Buy food and everything needed, and they would be able to pay the prices as they're going up. Meanwhile, the millennials are absolutely screwed. Will never be able to buy a home, and they can't afford food, and like it looks very bad for Gen X and millennials. So you have to assume that the market makers, which is the central bankers at this point, they know this. Or maybe they don't. I don't know. I question, are they really that dumb, or is this just a show? I think it's a show. They're not that dumb. They can't be. But you never know. I mean, when you live in a bubble societally as well, like they live in a whole different world. They've got their friends. They don't they don't go to the same stores as you. They have people who shop for them. They live a whole different like reality. Um, that there's no mandates for them. They got their private jets and everything. Um, so that does cause kind of like tunnel vision for them as well. Like Kramer was screaming, "This is the best economy we've ever seen." Dude's delusional or just a complete fraud liar. I think a little bit of both. And great, yeah, the market dumped like the next day too. This was earlier this week and last week. Um, Moral of the story is, will they let a correction right after the holiday season, like going into next year? I don't know. We got to look at the charts here. They probably will because of the variant. They're gonna do the scare thing. Everyone's gonna get scared again, and then that'll be the excuse for the 15 to 20% correction, something like that. Although looking at the moving averages on the monthly, I mean, next support is very low. Let's take a look. Let's do some TA. The 3 month here for the S&P is on a 7 count. So technically 9 more months of upside. Oh, another thing that they have to keep in mind is election season's coming up for 2022 towards the end of summer, right? So they kind of have to keep the music playing and not piss people off too much to fall out of their I mean, even the leftists will have to like have an okay year because they could fall out of the delusion as well because things are getting pretty bad, right? Because everything is based on perception, guys. It's all based on confidence. The monthly for the S&P 500 is on a 9 sell. For the Nasdaq, we had a 9 sell 2 months ago, but my heat map is fairly red. The oscillators are fairly oversold, and the MACD looks like it wants to cross the downside. Let's go look at the weekly for the S&P 500. So right now for the short term, it does look like the market's about to just rip a little bit higher. And maybe we'll get a blow off top in the next few weeks. And then right after, the rug is going to get pulled. Let's look at the 3-day. Why are my oscillators laying up? It's weird. So on the daily, yeah, I feel like it's going to go a little bit higher for a few more weeks, maybe even a month. Who knows? We'll see what the holiday earnings will be report, but that'll be going into midwinter by the time that comes out. So that'll come out actually technically summer or no, spring. But projected earnings for the holiday season come out I think March. I'm not exactly sure. So I'm looking at that. Forgot. Yeah, I mean on the daily it looks bullish for the S&P. So maybe a few more weeks of upside. Blow off top, maybe to 5,000 on the S&P 500, which is insane. Let's take a look at Dow Jones. No, let's look at the Nasdaq's on the right. Let's take a look at the FANG index. I mean, someone put in a bid right down in here, and they want to get the price back up of the 50 MA. Let's look at the Dow. Yeah, they bought it right back up. I think so Wall Street knows, they've caught on to the game. They're like, oh, new variant, perfect. This will give them the excuse to print more, and they just bought prior in anticipation. That is risky in my opinion because we still might get a correction soon after if this variant, and they essentially it's going to be based on lockdowns. Maybe the big cities will do it, but I don't think the rest of the country would swallow that. Not anymore. They're done. I go around in public and people are done with this shit. Like where I live, they're done. Like nobody's taking it seriously. Nobody wears masks. Like only few people, and I stare them down. Here's the VIX and Ultra Pro Short QQQ. I mean, they've hit rock bottom. This would be nice if we do get some sort of correction. And we have, these are monthly charts, by the way. Monthly. Take it to weekly. Do not have buy signals on these. So yeah, I mean, possibly a few more weeks. Can the market not correct until like towards the end of 2022? Like a real correction. Like you'll have dips. 10%, maybe 15 at the worst, but then the market just goes up higher. Can that actually happen? Yeah, I mean, that happened to all countries who printed endless money. Their stock markets just kept going up and up and up and up, never a real correction. Nothing like the previous correction, which was the COVID one, right? The COVID correction was for the S&P. If I remember correctly, it was like a 40% drop. Let's see what it was from the all-time high. It was a 35% drop. Can we do another 35% over this Omicron thing? No, I don't believe so. I don't even think a 25 or 30% drop would be, because to reinflate the stock market, they would have to print double what was printed in 2020. And at that point, I mean, the debt is out of, like, that's insane. But here's the thing. If the rest of the world's doing it, if everyone's doing it, no one can point a finger at each other and say, oh, look at your credibility. It's gone. Because they're doing it as well. Actually, the Ruskies are the only ones who aren't doing it and have, like, no debt. But the rest of the Western world and China, and they're all doing it, especially with their housing market dump, right? I'm just brainstorming, guys. Nasdaq Composite on the monthly, also on a 9 sell, and we did have a sell-off right after. But here's the thing: if they bid it back up, and the price gets past the previous all-time high on the Nasdaq Composite here, then higher, and then they'll have to keep the music playing towards the end of summer, right? So, or not even summer, it's until the end of fall. That's a long time to keep this market juiced. I mean, it's great for us. I don't mind it. Here's all the indices, monthly charts, E-mini futures for Nasdaq here, S&P 500 here, the FANG index, Dow Jones right here, Russell in the center here. Russell's been lagging everything else. Why? Because it's not like tech. These are real mid-tier to small-tier real businesses, and this index has been lagging. It's been barely holding on. It's because the companies in the real economy, I think they're struggling. Not all of them, but I think they're struggling. Here's the Vanguard Total World Stock Index. The dip was bought. So if the markets overall cannot make a new high, so the market's probably going to go up into this weekend and probably into the end of the year. But if we end the year at all-time highs, that's bullish. If all the indices can't make the new all-time highs, then it might roll over, and then the monthly chart on the S&P and a lot of these, that 9 sell signal will be in effect, and we'll get some sort of correction. Will it be like a huge crash? I do not think so, because then they can't reinflate it, and then like shit really hits the fan. Like I don't know what happens after that. And they won't let that happen. So I still have positions on the VIX. I'll probably add to them as time goes on, and we'll see. But not yet. I'm not adding to it yet. I've added previously in the past few weeks. It's up, but it's really just a hedge so my account doesn't get nuked. From margin, right? If you have a margin account. Still not convinced. Like I'm still gonna play this. I listen to the market. I let the market tell me what's gonna happen. I don't try to predict the market. Okay? And it's really hard with all this manipulation. Powell was very dovish last FOMC. So they're gonna let inflation run hot. I believe they are. They have no other choice, really. By the way, letting the inflation run is how they get rid of all the debt they're incurring while printing even more. All this talk about taper, this and that, I told you guys, that's just, it's just, they're managing people's psychology, right? So, because if the psychology is that inflation is only going to go up, what does that do? It creates more inflation, because then people go and start hoarding and buying more and more goods in anticipation of prices going up, right? So it's kind of like a self-fulfilling prophecy on a psychological level. Here's the 10-year yield. It's a little high. I know that sounds nuts, saying it's a little high at 1.46%. I think they're going to push it lower, back down below 1.38, unless the market starts dumping and correcting. Every time the market corrects, the yields spike. But sometimes when the yield spikes and the market isn't correcting, the market's going up higher, that's an anticipation. That's the yield curve flattening and then inverting. Even though they peg the short-term interest rates, trying to manipulate it, right? If yields go, it's very simple. If yields stay here or spike a little bit higher up towards 1.8, one, the housing market's going to start rolling over. Two, the stock market's actually going to start correcting, right? And then they have to suppress it and push it back down by buying bonds, which is inflationary because now they're printing again. So, they're really stuck between a rock and a hard place here. I know what you're seeing right here is the cup and handle on the 10-year yield. Technically, if yields spike again up to like 1.7, then yeah, it's like a cup handle, and then the yields will spike above 2%, and they might start running. That would signal a huge market correction. So keep your eyes on the prize here on the 10-year yield. That's the bond market trying to force a correction on the market because it's overvalued. Granted, if you adjust it for inflation, is it overvalued? That's another thing to think about. This is what happens when you don't have a free market and it's highly manipulated. During a normal time, your metrics get skewed and warped from the money printing. You have to look at it differently, and it's difficult. Basically, everything they taught you in economics and finance and all that, it goes out the window. None of those metrics work anymore. which it screws up the balance sheets of companies as well. But maybe in a good way. It shows that their earnings are higher and higher and higher, but really they're just selling less goods and people are paying more for them. Also, with this inflationary environment, you're going to see inflation then deflation. Inflation, it's stagflation. Because as prices go higher, people buy less goods. I do think energy costs are going to keep going higher. Europe's screwed. I don't know. It looks like they're going to have blackouts this way. I don't know what's going to happen there. Gold has just a giant bull flag on the weekly. Super bullish. If the price could just get back to 1900, it's like a giant cup and handle and bull flag, and it'll break out. And oil, if it just keeps going higher, which I believe it will, I thought it would get to $100 by this year, but not yet. It doesn't matter. Next year, then we'll be over 100. I guarantee it by next year. But that's interesting, right? Because it's also it's an election year. It's an important one too. What are they gonna do? They have to let inflation go. So this is the situation. It's let the stock market crash, and then inflation stops. But technically, like I said earlier, would that actually be deflationary? No, because all the money will flow out of the stock market, and it'll go into the real economy if it crashes. I've actually never heard anyone say this before. I might be the first one. I was the first one to call COVID before it happened, and then the black swan event. I haven't heard anyone say if the stock market dumps, money will flow out of the market into the economy and then just cause. We've already seen massive inflation with supercars, yachts, Rolexes, everything like that, and I guess that'll get even worse. But I'm talking about people's retirements. The average person, if they get really scared, I think the average person will actually get really scared once the market drops more than 20%. Then retirement funds will start exiting the market. And then my last video, I showed you guys how much money was in people's bank accounts. So it's weird, right? People are struggling, prices are going higher, yet people still have a rainy day fund in their savings or checking accounts, because they started accounting. They used to not count checking accounts, but now they accounted it for the money supply, and the chart is off the Richter scale. So there is still a lot of cash out, and I just feel like people are afraid to put that into the market because it's gone up so much, right? Or just keeping that for who knows? They don't want to spend it because maybe they see prices going up. So an average person, like a normie's reaction at first, is to save money when they see prices going up, because that's just what they do. And they're like, well, I'm saving money for when the prices come back down. Funny thing, what if they don't come back down? Eventually they're like, oh crap, maybe I should just buy now before it just keeps going higher. And that's when you start getting runaway inflation. I could talk about this all day, guys. Silver looks completely manipulated. Look at this. So people are worried about the cost of producing and mining, and that goes for every metal, right? Same thing happened with copper. So it worked with copper, lead, zinc, everything else that goes into car batteries and everything. That's not just because of the EV movement, but this happened right after they printed trillions. Well, the cost of oil went back up, everything went back up, the energy costs went back up. So what that does is your cost of operating goes up. So they have to raise prices. So they will sell all commodities at a higher price to make up for the cost of oil and energy, right? All right. So there's no way the prices of metals could stay this low this long. And so you might also think, well, will the demand be there for these things if the economy slows down, as it kind of has. It's weird. It's a real weird, distorted economy. Um, no, I mean they want to do the Green Deal thing, and they want EVs everywhere, and that means new get like gas stations everywhere, smart cities, this and that. You know, that takes a lot of metals. And last time I checked, the demand for semiconductors, servers, microchips, all that is it's in full swing. So they're gonna keep the music playing, I believe, as long as humanly possible. And then eventually, maybe it'll. I think the real triggering event will happen at the very end of 2023, going into 2024, where a huge event happens, and then the markets just totally get annihilated. The stock market, and again, that'll be, I think, over geopolitical shit, because when things are falling apart domestically for empires, they need a distraction. So people, they need a distraction. You know what? So they'll start something from, you know, like there's a threat from the outside. Although for the U.S., it looks like they want. Some people are pushing for, you know. I don't think that's gonna happen. I don't think anyone like who are you gonna fight? Yeah, things are getting interesting. Let's take a look at the news, and I'm cutting this video. Uh, After that, things are feels like the news cycle has slowed down. Like people just stopped caring. So here's this article: the biggest risk to stocks is not the Fed. It's because we're living in the most volatile of times. Here's economic growth versus M2 money velocity. So green line's gross domestic product, velocity of M2 money stock. It's this like gray line right here. It's the velocity of money is not turning. I guess no one's giving out loans. Although I have to believe they are if so many people are buying homes. But money isn't turning in the real economy. Not much. It's at record lows. That means there isn't business is being created like that are taking out loans. And people aren't getting more loans, I guess. It doesn't make sense though, because people are getting new cars, and they're taking out like 7-year loans on used cars, because used cars prices have doubled in the past 2 years because of all the stimulus and the stimmy checks, and um the the generous unemployment, welfare, and child credits, right? A lot of these people driving around new cars, I swear to God, they don't even have jobs. There needs to be a triggering event to get money velocity to go up, to start moving again like it used to. The 90s were a great time in the US. That was probably peak US. Well, arguably the 50s, but the 90s were pretty good. Um, I remember them. Totally different world from today. It was kind of cool. It was weird, but I don't know. I don't want to get into it. But money velocity was up. Everyone was doing great. So money was turning in the economy. And the only way the economy is going to start moving again, it's going to feel good in the US temporarily. There's still going to be a huge crash in the end, like, scorched earth. But let's say for next year, they really want to get the economy moving, and they want people to feel good for the elections. They got to get a money velocity going, meaning the banks have to start lending. I just feel like they don't want to, because they don't want to take on the risk. It's too risky for them, because they know everyone's screwed. They're not dumb. So I'm assuming everyone who is buying homes, this and that, have perfect credit, have a decent amount of down payment, right? Or maybe half of it or more is really just BlackRock buying up all the assets in America so you could own nothing and be happy, right? That's another problem. And then they'll rent it out to you. Huge, marked up. People aren't going to be able to live. They'll be plugged into the meta eating bug paste, talking to Zucker. And, it's crazy. All the stimulus coming into the U.S., it's also coming from abroad because they're doing it, in China especially. By the way, it matters what happens in China because technically they're the biggest economy in the world. If I haven't really been keeping up to date with the new Silk Road, but they got a train route all the way from like down in Indonesia, like all the way up to not it. I think that's on it. From like Taiwan all the way up into China, into north of Russia, and then it goes all the way down into Europe, and then all the way into the Middle East. It's crazy. I don't have the picture now to bring up, but yeah, they've moved into Africa and they have an industrial base, but they also have the biggest commercial and housing bubble known to man. And what else is insane is that we also have a bubble in the U.S. and all across the world, asset bubble for real estate. But then again, if inflation keeps going higher and higher and higher, $500,000 is like the equivalent of $100,000 10 years ago. So if your home doubled in dollar terms or fiat terms, is it really mispriced? Not really. See how that works? It's just that like some point your wages do not keep up with all of the price increases and people can't, I mean, in the end, no one can buy a new home and then people can't even rent. It's like just a slow death by 1,000 cuts, day after day after day. And this is, I believe, happening now globally. I mean, I don't know what the West's plan is. Like, what are they going to do? Everyone's going to just live in rent. Everyone's just going to rent and live in little shoebox apartments. Like, do they really think that's just going to, everyone's going to be okay with that and they're just going to go along with it? I do believe 1/3 of the population will, but the rest, they're like, I get the atmosphere in the air, because I notice this too on people, and I talk to people. They're pissed like already, and if things get much worse, I mean, but honestly, they have no choice. They're just gonna keep the music playing, because the alternative is just to let everything dump massively. Good news is, I mean, gold and silver is going to break out in 2022. I just don't know if it's going to dump one more time with a market correction. I don't know if they're going to let a market correction of over 15% happen. If the market corrects 15%, I mean, it's like a few days, maybe a week of downside for metals, but it's not that much. Sometimes metals holds up and it just goes green. I don't care. I'm just waiting and I'm being patient. And the mining stocks are pretty much at their lows. I looked at my portfolio. I got a little chart there. It's hit support on my portfolio value. And this should be it. I mean, this should be the bottom for mining stocks and other commodity stocks. So if you're interested, I'm going to start doing a little more research on them. I've already researched hundreds of guys. I'm just going to do some cleanup. Like, I need to go and check out the news on all these mining stocks, see what's doing good. I'm about to upload all the stocks in my portfolio that are green and up. Some are still up like 4x, 5x. Some are only up 40%, 50%. Some are up only 10%. Those are the ones that are up. Of course, I have a ton of mining stocks that are in the red. So, if you're interested, go to my website. The link is below the video. If you can't figure that out, then don't join. I don't want you. All right? So, I should do a end of year sale. I'll do like a huge sale, like $50. How about that? The promo code will be below the video in the comment section. You have to use it when you check out. You have to apply the code. when you're checking out, or paste and copy it. All right, guys. So $50 and then $20 a month. And then also you get my strategies for all the crypto that's going on, which is mad gains. There's so many gains that are coming. I'll talk about that later. All right, guys. Until next time.